So this time I've done this recording first. Bar bar bhul jata. So good morning everyone and welcome to yet another wonderful edition of the Saturday morning sessions. SMS. Really delighted to share. I'm really to share that we have got wonderful feedback from all the members as to how it is helping them in their practice and also in their understanding. So it's really wonderful to know that the initiative is being of use and fruitful to all the members. Today we have with us uh, CA Advocate Vivek Ladaji, who has kindly consented to be the speaker today. As we all know, we had recently the conclusion of the 55th GST Council meeting, which laid bare some important issues. So before going to the issues, I'll just give a brief introduction of Vivek ji. So he's a young author, litigator consultant and speaker on GST. We know him as a leading speaker, leading author on Taxman. He's a founder and national head of his own kind of venture, Law Brothers. Mr. Ladda is Bachelor of Law, chartered accountant, cost accountant, and a compulsory, and he possesses all the four pillars of the possession of business solutions. He has worked with on the research project with the CBIC and the customs on the IGOT project. He has been engaged by the NASIN, he has been engaged by NASIN and for giving training to the officers, which and also the Rajasthan government and the Surat Audit Commissioner as a faculty to train the officers of CGST and SGST. He has provided more than 550 legal opinion on complex matters. He is also appeared as chief advisor at Naredco. Mr. Ladda has served as the chairman of the GST Advisory Board of NIRC. He is a co-opted member of the ITT committee of WIRC of ICAI. He is a founder member of the Students Forum of the BCAS and past president of Rajasthan Vidyarthi Griha. And apart from this, he has also got a recent laurel about which I will request Mr. Vivek Ladda to share about it, about the wonderful position of the advisor that he's been appointed to. So with that brief introduction, I will hand over the mic to Vivek ji to carry forward the discussion. Before that, also saying in a few words about the recent appointment. Over to you, Vivek ji.
Thank you, sir. Thank you, Roop sir. Thank you to this prestigious forum, which is enriching all the experts and students like me. So, shall I share my screen, sir?
Yes, sir.
Yeah, you can. You can.
I guess Vivek sir's internet is an issue. He should be joining back. Yeah.
So, I'm not going to take all the circulars which have been issued. In fact, we'll go by the decided agenda. As
Sir,
you can
आपका
see,
screen share नहीं है विवेक sir.
Okay.
I think some issue with your internet. You got lost for
Yes,
a while
yes,
and
yes,
you
yes,
yeah.
yes. There's an internet issue. Actually, I'm at Baroda today for a
Oh.
deliberation, and
No
I'm in
problem.
hotel right now, and I'm not getting a good connectivity
Uh-huh.
here. So, okay. So, as per the agenda, I am going to take 5 matters for which the discussion has to take place. The screen shows the 5 agenda very clearly. First one is ITC qua goods delivered on X factory or X works basis. The second one is penalty provision, which is to be amended and inserted under section 107 and 112. Another one is the rate issue, that is specified premises qua the rate determination for the restaurant services. And then we have to discuss about the late fees waiver related aspects in connection with the furnishing GSTR 9C. And the last but not the least, 17.5D, which is much discussed aspect as such. So these 5 issues are supposed to be discussed by me, and I would restrain myself from discussing all these aspects and not beyond this. So let's go with the very first issue, that is ex-factory sales. So as we all know that section 16 provides the eligibility conditions of input tax credit, and section 16 subsection 2 clause B says that notwithstanding anything contained in other provisions of section 16, ITC shall be person shall be eligible to take ITC only if he has received the goods. So the discussion starts with the proposition that what is the actual meaning of the receipt of the goods. And for this, GST Council has discussed this particular aspect, and the press release has been issued, and then further we have the circular in hand on that particular issue. So I would firstly go with the reading of the press release, and then we'll understand that what is the context and what are the pertinent issues arising out of it. Press release says that GST Council is recommending to clarify that in a ex-works contract where the goods are delivered by the supplier to a recipient or transporters at the supplier's place of business, and the property in goods transferred to the recipient at that point, the goods are considered to be received by the recipient under section 16 subsection 2 clause B of CGST Act. And the recipient may claim the ITC on such goods subject to the other eligibility conditions of section 16 and 17 of CGST. So friends, we all know there are 2 types of propositions of a contract. First one is FOP basis, and the another one is this ex-factory basis. So in a case where I supply the goods to you on a ex-factory basis, that means the goods shall be deemed to be delivered at my factory gate itself. So at the time of removal itself, I am supplying it to you. So in fact, it should be, because in a conservative example, I take a scenario of sales. So for an example, I am selling the goods to you on say 30th December, and the goods is being removed on 30th December itself, but it is being received by you on 1st of January of the next year, right? So the problem arises on the cutoff dates, because we have a notion of tax period in the GST law, and we understand that for every tax period we have to furnish the return. So the question arises, at what point of time the recipient is entitled to take the credit? That shall be decided based on the notion that whether he has to he is set to he is set to receive the goods in the month of December, or he is set to receive the goods in the month of January as per section 16 subsection 2 clause B. So this is a very common problem which people were facing across the industry, and they were discussing a lot about it. Though I think this position is not that much difficult, which people are actually pretending it or projecting it. But after so many years of this GST Council has considered this issue is for the clarification, and this issue of course, when you read the circular, you find this particular discussion qua particular industry. Okay, but let me tell you, this issue is not just related to a particular industry. This issue is a long-lasting issue since from very beginning of the formal economy. Erstwhile laws also have dealt with this kind of issue, and in GST regime also now we are coming across with this particular scenario. So the point is, when we read the word, he has received the goods or services of both, the question arises, what is the actual meaning of the receipt of the goods or services or both? Circular, let's keep the circular aside. Firstly, we have to understand that what is the law, because circular is nothing but the interpretation of the law from department actually, right? So they are interpreting it. They are interpreting the law only, right? So as a student of law, we need to understand that how should we take the meaning of the word receipt of the goods as such. Okay, so the point is, if I take the word received as physically received, would it actually be a purposeful reading of the law, or would not it be a narrow reading of the law? So a department is taking the actions by way of issuing the notices to many taxpayers in the pretext that because you have not received the goods in that particular month and you have taken the ITC in GSTR 3B, so you are set to avail the input tax credit in excess, and therefore they were actually issuing the notices under section 73 or 74 as per their choices. And you understand the implication of 73 and 74 as well, right? Furthermore, in section 74, you have more repercussions in terms of penalty. So just because of this particular mechanical reading of the law, taxpayers are actually facing the repercussions from the department side. The first point is, can I take the word receipt as physically received? I think no. Of course, we have first two conditions, that possession of the invoice and possession of the goods, right? So I take this word as possession. Okay, the possession is again not to be treated as physical possession. The received is a broader term, and I think as like in the sale of goods act, we have a term constructive delivery, I can take it as a constructive receipt also. And this is supported by various provisions of this GST law itself. In fact, at the bottom of clause B, Parliament has provided the explanation. And this explanation is also providing a very clarity about the intent of the law. It says, for the purpose of this clause, it shall be deemed that registered person has received the goods, or as the case may be, the services, where the goods are delivered by the supplier to a recipient or any other person on the direction of such registered person, whether acting as an agent or otherwise, before or during the movement of the goods. So they themselves are treating it as receipt of the goods by way of deeming fiction, where the goods are delivered by the supplier to a recipient before or during of the movement of the goods, either by way of transfer of title of documents of title to the goods or otherwise. So they themselves are treating it as deemed to be received first. Second is, when you see a proposition of bill to ship to transactions. So what happens is, recipient does not receive the goods at his own business premises. Rather, at his instruction, the supplier supplies or delivers the goods to a third party. Then also it is treated as if the buyer, the actual buyer, who is liable to pay the consideration to the supplier is said to receive the goods. So the law is itself providing a good clarity about it, that even though it is not physically received, in a case of X factory sales or X work sales, the good should be treated as received. So it should be treated as if the recipient has received the goods, and thereby there is no question of making it ineligible in that particular tax period. So I go further to discuss that in a case where Supreme Court has also held that where we need to go for the purposive construction as such, because if the purpose is being defeated, you cannot go straight forward with the literal interpretation. And therefore, in case of Grid Corporation of Odisha Limited, Supreme Court has held that you need to adopt the purposive construction where the purpose is being defeated by way of adopting the literal interpretation. And therefore, word receipt should not be taken as physically received only. When I go with, I should go with few of the examples, then I'll go to Sale of Goods Act related provision, because that is very, very important. Here you can see on 31st of December 2024, the goods are being sent by the supplier, and it is being physically received on 2nd of January. If it is a FOB sales, in that case, the recipient is not set to receive the goods in the month of December on. In fact, because it is the FOB sales, the supplier is supposed to take the entire responsibility of delivering it to the place where the recipient has instructed him to deliver. And therefore, of course, supplier will issue the invoice under section 31 subsection 1 on or before the removal of the goods, and thereby he will be issuing the invoice in the month of December only, but the recipient is entitled to take the credit in GSTR 3B while furnishing GSTR 3B of January 2025 in the month of February 2025, right? The another case is, had it been a case of X factory sales, in that case, because the goods are transferred at the factory gate itself, in that case, he is said to receive the goods in the month of December only. Now, when I relate it in accounting also, okay, because you recognize the revenue as per accounting standard 9 or Ind AS 18, where it is said that the revenue could be recognized when the significant risk and rewards are transferred. And when the significant risk and rewards are transferred are to be seen in the context of the contract only. It is to be seen in the context of the contract only. So what is the actual contract is required to be seen. It is not just a blanket proposition that it has to happen, right? So we have to go by the context only. Now, furthermore, when you recognize the asset in accounting, so if you read the framework of accounting standard, it says asset is the resource being controlled by the enterprise. So when you get the control, actually, you get the control on the factory gate itself in case of X factory sales. And therefore, you recognize the asset on that particular moment only. And I hope you would have seen the goods and transit proposition in the balance sheet as well. And just because of both of the definitions, both of the principles of recognizing the revenue and recognizing the asset, both are clearly aligned. Okay, there is no disalignment in that. Yes, of course, in GST law, there is a disalignment in issuance of invoice and taking the input tax credit as per the context which you are able to see in the second scenario. Invoice is being issued in the month of December, but the credit can be taken in the next month, right? So in the first scenario, I'm sorry, not in the second. And there is a disalignment because of the taxation statute requirement. Otherwise, in case where the general things are happening, both of the things are clearly aligned and there is no ambiguity or misalignment. I go with another scenario, that in what case you can treat it as ex factory or FOB sales. Same example, on 31st of December 2024, the goods are being handed over to the transporter at the factory gate for onward transmission to the buyer. And the buyer is receiving the goods on 2nd of January 2020. In this case, if the contract stipulates that the transportation cost has to be afforded by the supplier and the insurance claim in case the needs arises to be lodged by the supplier only, these credentials are showing that this contract is FOB contract, and therefore the buyer shall not be entitled to take the credit in the month of in GSTR 3B for the month of December. Because it is an FOB sales, he is set to receive the goods in the month of January for the purpose of section 16 subsection 2 clause 5. I hope it is clear to everyone.
Yes, sir.
Okay.
Do you want to comment anything on the services also, though it's so for Xworks goods?
So I think the context which they are specifying is for the goods only. If you have any particular question in context of service, you please ask me if I could respond it.
No. So this always that issue where the AMC contracts where upfront the AMC fees is paid, and from Jan to December, the invoice is also raised on 1st Jan. Now the services are deemed received upon payment of the invoice, or as and when month over month they come and provide the service and the availment of the credit. So do they need to wait month over month to avail this credit since the service is received month over month till the December? So there's the near
But if they have issued the invoice in the next month, then what? Then what is the issue?
Invoice has been issued. The receipt of goods and services when we talk. So the receipt of service has received in the month of March, April, May, June. Every month they come and provide their service.
Yes.
So would 16 to be come in a way. So
are you asking something?
No, I'm asking will 16 to be come in a way.
Okay. See, sir, in case of AMC contracts, now again, it depends upon which type of AMC service. Let me tell you. First point, if I think of a general business transactions in AMC propositions, AMC, if the month is over, the services are deemed to be received for that particular month, right? The point is whether the supplier has issued the invoice in that month or the next month. If supplier has issued the invoice in the same month only, say December month, your let's
generally the invoices are issued upfront for 1 year.
So I can talk about that particular example also. But let me tell you, if there is a annual maintenance contract services, say for an example, your office is availing the AMC services from your IT vendor. Now IT vendor is providing the services for 12 months as a whole, but with a clear condition that it will be issuing the invoices for for each of the month. In that case, you have to understand that whether the invoice is issued in the same month for which you are talking about. If it is happening in that case, both of the events are happening in the same month, you don't have the ITC eligibility issue. Because invoice is issued in the month of December, December is expired. So the goods, so the services are also received in that month itself. The invoices are there with you. You have the same in the GSTR 2B as a declaration. You are well entitled to take the credit. Now, let's talk about an year contract, right? And the invoice is being issued yearly. Is this
Yes, sir.
okay? So if they are issuing the invoice on a year-on-year basis, I think even though you can say it as receipt of the services qua that particular month, you don't have the invoice in your possession as such. So you won't be entitled to take the input tax credit on a monthly basis.
Wouldn't we say that in the month of say Jan, when the invoice has been issued by the supplier, now recipient having made the payment, he has received the service for it, and post that what is a civil contractual obligation to perform. So the right to receive itself is the receipt of service.
I think right to receive is absolutely a different thing from the receipt of the goods. Receipt of the goods is the fact.
Okay.
Right to receive
No,
is
because in
arising
the
out of the
X
contract.
work, even in the X work, what the principle that has been established is you don't have the physical possession of the goods. Since the goods have from the revenue recognition point, from the seller factory, the goods have moved. So your right over that has been established, so the credit can be availed. Can we not take the analogy and apply it here?
See, I think there are two anomalies in your discussion. First one is payment. Payment is not at all related to the fact whether I have received the services or not. So payment will not establish whether I have received the services or not. The point is whether I have really received the services or not. This is the point.
So the case
So,
may be
again,
similar to advance received also, in that whenever for advance is received for service, GST is charged and it's paid, and it already appears in 2B also. But whether we are allowed to take that credit is similar to
No.
the invoice being issued also.
No, because if you have not received, if you have not received the services, how can you say that the clause B condition is satisfied? See, there are two distinct compliances which are required to be performed under the GST law. One has to issue the invoice, one has to issue the receipt voucher under section 31(3). These are different things from the ITC eligibilities. It can suffice first of the requirement of the ITC eligibility whether you are in possession of the tax invoice or not. But this is not at all related to the second condition. So tax invoice, issuance of tax invoice or issuance of receipt voucher will not establish that whether you have really received the goods or services or not. You have to examine it independently whether you have received the particular thing or not. Had it been a case, why there would be two conditions as such in section 16(2), right? So I think you need to examine it independently, and based on the facts, you have to determine the eligibility, and accordingly you have to go for it. I hope it is clear. Hello, everyone.
Yes, sir.
Okay, thank you. Now, let's go for an advanced reading of section 36 of the Sale of Goods Act. This is very interesting. It says, because we are discussing about, till now we have discussed that what is the stipulation of GST law as such, right? And what are the nuances as such? If we take a particular example, now I am going to the scenario to understand whether it is an FOB sales or whether it is the ex-factory sales. And for that, Section 36 of Sale of Goods Act may work. Section 36 of Sale of Goods Act is to be read in a line in a case where buyer and seller both have not mutually decided the terms and conditions. So if everything is silent, then in what sense it is to be taken? Is it to be taken as ex-factory or is it to be taken as FOB sales? Because many a times the contracts are not stipulating it properly. In case if it is a verbal discussion, then again, a big issue can arise in that. It says that whether it is for the buyer to take the possession of the goods or for seller to send them to a buyer is a question depending in each case of the contract, express or implied between the parties. So, of course, every single contract or every single conduct will decide that whether it is for buyer to take the possession or for seller to send them to the buyer. So, if it is for the buyer to take the possession of the goods, you can treat it as ex-factory, or for seller to send them to the buyer can be taken as a FOB sales. Apart from any such contract, so it means if there is no contractual requirement or there is no contractual stipulation in that regard, the goods sold are to be delivered at the place at which they are at the time of sale. And the goods agreed to be sold are to be delivered at a place which they are at the time of agreement to sell. And if not in existence, at the place at which they are manufactured or produced. So Sale of Goods Act is also establishing that at what point of time it is to be treated as if it is delivered. Okay. So it says apart from such contract, goods sold are to be delivered at a place at which they are at the time of sale itself. So sale किस point पे हो रही है, that will decide that at which place it is being delivered. So, and when you read section 49 of Indian Contract Act, you find something different. In fact, there, when I go for the interplay between section 39 of Sale of Goods Act and section 49 of Indian Contract Act, I find an anomaly between both of the provision. It says place for performance of the promise where no application to be made and where no place fixed for the performance. So it is talking about a contract which is not explicit or implied about a particular delivery, whether it is FOB or ex-factory. It says when a promise is to be performed without application by the promisee and no place is fixed for the performance of it, it is the duty of the promoter to apply to the promisee to appoint a reasonable place for the performance of the promise and to perform it at such place. It is saying that in case where it is not stipulated, it is the supplier's responsibility, it is the supplier's duty to apply to the promisee to appoint a reasonable place. वो ये बोलेगा बायर को कि तुम बताओ मुझे क्या करना है, मुझे किस प्लेस पर डिलीवर करना है. So section 49 is in fact indirectly asking both of the parties to get a clarity out of it. And the promisor has to apply to the promisee to appoint a reasonable place for the performance of the promise. So they have to determine that what should be the place of performance as such. If they are not able to decide it, then in that case, section 36 subsection 1 will play the role that at which point of time they are available for the sale. And thereby it will be determined where as to when or as to where this particular supply is to take place. So of course, there is a technicality in it, but let us try to establish everything on a very clear note that what type of supply it is wherever it is not being stipulated. Now, it also causes some few issues out of it. The first point is, when you read section 17 subsection 5, it says that if the goods are lost or stolen or destroyed or written off or disposed of by way of gift of free sample, the buyer is not entitled to take the credit. So there is a block credit provision under section 17(5)(h), which says that notwithstanding anything contained in section 16 and 18, ITC shall not be available in following cases, and this is the last case of section 17(5). Yes, sir. The point is, if it is a X factory sales or X work sales, and where the goods are lost or stolen, etc., in that case, the buyer has to reverse the credit. And if it is the FOB sales and the goods are lost, stolen, etc., in that case, the supplier has to reverse the credit. Needless to state, it is very normal to imagine that it is to take place. And circular also discusses where the goods are delivered at the factory gate in X factory contract, but later on, if the goods are diverted for any use other than the business or in furtherance of business, then in that case, the buyer is not entitled for the ITC. One point which is also supporting, when you read section 16 subsection 2 clause, section 16 subsection 1, it allows a registered person to take the credit when the goods are used or intended to be used in the course of business. So the word intended to be used is also giving an indirect support to take the credit even when the goods are not physically received by the recipient. So these marks are very important marks to understand this. So with this, I think this particular issue is clear from my side. If you have any question, I can. Otherwise, I go further.
We can move further, sir.
Sir,
Thank
one
you.
point I wanted to raise at this point. Venu sir had mentioned about issuing the invoice in advance. So in that case, how is it going to be managed? Because when you don't take credit at the time or at the time of 2B, appearing in 2B, and then you're supposed to take it in each of the months when the services are actually delivered. So how will that be managed?
So could you take an example?
No, the invoice is issued in January of that year.
Yes.
And supposing the services are going to be rendered through the whole of the year up to December, but the credit appears in 2B of January only, and you avail the full credit. But
No. But you have not received the credit for the full month in AMC contract. You have received a part of the service only.
Correct.
Okay.
So we take the credit and reverse it.
You can go by that.
Through the reclaim mode.
Yes.
Okay.
So 4A5 of GSTR 3B is there for us, and I think there is a circular 170. If I'm not missing the number, it says that you have to go with the gross approach, and you have to reverse the credit, and then you have to reclaim as and when you are eligible. Even it is not a case
invoice is single, so I don't think breaking the credit over 12 months, availing over 12 months would be an appropriate suggestion.
Okay.
I agree with the view. I reverse now, put it into temporarily parked, avail in full in the December might be one valid view, or avail it at the front is another view. But हर महीना 12 महीने के लिए 1000 लेने के लिए is somewhere I am not convinced.
Sir, the point is, could you say that services have been received at day 0 or at the end of the very first month? No. Okay. Could you wait for expiry of that financial year or that particular year? If so, you are free to go. No one can ask you that why you have taken the credit delayed.
Credit is lost because 30th November के बाद ले भी नहीं सकते.
30th नवंबर के बाद नहीं ले सकते, बट जितना ले सकते हैं उतना तो लेंगे ना।
But invoice एक ही है ना सर?
हाँ, तो क्या हो गया?
So
सी
how
इनवॉइस
you-
एक है, आप समझने की कोशिश करिए। इनवॉइस एक है, डज नॉट मीन कि मैं क्रेडिट ऐसे नहीं ले सकता, ऐसा लॉ में कहीं लिखा नहीं है। द पॉइंट इज, अच्छा आप ये
When it is
बताइए सर।
qua invoice, no sir, it is not a portion of the invoice unless we break it only for the purpose of Rule 42. But there's no way where out of in one value in the invoice I'm taking part and I'm not taking part.
ओके,
Even in the
तो
lot's case, they say that till the last lot is received, don't avail.
सी I give my two
Got it.
backings for this.
Yeah.
First one is, when you read section 31 subsection 2 of Central GST Act, it says that registered person supplying the services shall issue the invoice on or before the provision of the services. So the tax invoice is being issued by the fiction of the law. The first
But
point. Okay.
in case of service, I still have 30 days after completion of service. So
That's okay.
I can also have a situation where December में AMC खत्म होने के बाद on 31st of January of next year, I may
Yes.
raise an invoice for the previous 12 months because my contract completed only on the 30th December. So it is not necessary ki I have to wait. Now the contract says unless all the 12-month service is not provided, the service is not deemed valid. Hence, you can raise the service upon completion of the AMC within 30 days. So I
Yes.
can also raise an invoice a year later.
Now I give you the second backing, which I was talking about. There is a concept of continuous supply of services. All right.
Correct.
Continuous in case of because the continuous supply of services do happen where the contract life is more than 3 months. Okay, as per section 2 of Central GST Act, that gives the definition of continuous supply of services where it is going for more than 3 months.
Right.
Cannot you take it in that sense that it is a continuous supply of services? Yes. If it is a continuous supply of services and the milestones are defined, the time of supply triggers like that only. If the time of supply can trigger like that, why cannot it be said that I have received the services for that month only? And there is no second question as per my firm understanding that I have not received the services in that tax period. This is the case of continuous supply of services. I am receiving it milestone by milestone. There is no point to say that it is not received completely as such. There is in that month only, right? So, to my knowledge, you are well entitled to take the credit for that month. You can make it in parcel, and you can go take a benefit of declaration of circular 170, as ma'am was saying. As per my understanding, you are well entitled.
Capital goods, sir. It is going to be used over a period of 5 years. Then in that case, should I take only 1/60th of the credit every month? I don't think it happens.
No. See, capital goods is different, sir. Different, ma'am. It was the case of supply of services. Now I go for capital goods. Law is very clear on it. On the day zero itself, you can take the credit of capital goods. Now the use is different, and that is why section 16(1) is saying that you are entitled to take the credit where the goods are used or intended to be used. So the word intended to be used is allowing you to take the credit for that capital goods in the very first month. Are you getting my point? So
But
even
both
though
look
you are
similar. I mean, the AMC contract as well as this capital goods are both aligned somewhere. The services are going to be used over a period of time in
No,
both cases.
No, but Soumya ma'am, in case of capital goods, you have received the goods.
Yeah, we
So
have
at that
received
point of time,
yes,
yeah, so at that point of time, your
Yes.
eligibility for ITC stands.
yes,
right.
For continuous service like AMC and also, there is a challenge regarding the receipt of goods when it
And
the point as
yes,
when you are
fantastic.
clearing. So that is the
Yes,
challenge.
sir.
So that is the problem. That is the problem.
Thank you, Rup sir.
But
Thank you.
Yeah, so I think let's bury it here and I think it's a food for thought that because for services kya hoga for continuous services.
And
I
this is
think
a
then,
matter of fact itself, whether you have received it or not. If you have received it, there is no question to think that, why it should not be treated as received assets, right?
because there are investigations which are going on this aspect also, but
Yes.
still it is not reached a conclusion. So I think it's a food
And
for
you
thought.
cannot take the entire credit in a month in which the tax invoice has been issued, because you cannot be said to be received for remaining months assets, right?
Yeah.
Yes. So let's go in a very rational manner, and let's not have the overthinking, with due respect.
Yeah.
I think,
So
Sir,
I think
time
we,
check.
I think
It's already 9:46. I just want to give
yeah,
you.
no, yeah. So we'll check.
yes.
Yeah, we'll take both the views, and now we'll go with the second thing. I think
Okay,
free deposit.
fantastic. Yes, yes.
Yeah.
So now I am going to take another proposed change in the law. This was the circular. This was not the change in the law. Now we are discussing about the proposed change in the law. This is the GST Council who has to discuss about the proposed changes, and the recommendations are passed on to the legislature, and legislature then to go for enactment of that particular provision. This is pertaining to the pre-deposit provisions, and the change is pertaining to the cases of penalty. Firstly, I go for a bare reading of section 107, which says that no appeal shall be filed unless the appellant has paid so and so in clause A and clause B. You know that it is asking you to pay the pre-deposit based on the disputed amount of tax. Of course, wherever it is not disputed, you have to pay in full, but wherever it is disputed, you have to pay 10% at the first appeal stage of the disputed tax. Then it says in the proviso, which is relevant for this moment, it says provided that no appeal shall be filed against an order under section 129(3) unless a sum equal to 25% of the penalty has been paid by the appeal. So it is saying that if it is a case of 129 interception cases, where the appeal can be filed only and only when 25% of the penalty is paid by the appellant, then only the appeal shall be entertained. Okay, हालांकि law तो ये बोलता है no appeal shall be filed. Okay, and as per my practical experience, appeal can always be filed even without payment of the pre-deposit requirement. There is an editable field in that, I can make it 0 and I can file. But the purpose is that they will not entertain it. Okay. So law is using the word filed, furnished in various provisions of this act. I don't know why they have used the word file rather than using the word entertain. Nevertheless, they are saying that if you want to make an appeal against the order issued under section 129, this is MOV 09, and when you issue the order under section 129 subsection 3, it provides a penalty. You all know that twice of the tax, wherever it is a taxable goods, is the penalty amount. And if you are not agreeing to that liability, you can always go for the you can always exercise the statutory right of making an appeal. In that case, at present, it is saying that you have to pay 25% of the penalty. Now, what they are proposing is, it says that to amend the proviso to section 107 subsection 6, providing for payment of pre-deposit at 10% instead of 25% for filing the appeal before the appellate authority in a case involving only demand of penalty without involving the demand of tax. So it is clearly saying that this change is to amend the proviso. Okay. In second case, when we'll be discussing about GST 80 provisions under section 112 subsection 8, it is asking about insertion and it is a very good mark. So they are saying no, now you don't have to pay 25, 10% will also suffice for the purpose of filing the. Now when I go for section 112 subsection 8, it says no appeal shall be filed under section 112 subsection 1 unless appellant has paid clause A, clause B, same provision, 10% of the disputed tax. But now they are asking, they are recommending to insert a new proviso to provide for the payment of pre-deposit at 10% for filing appeal before the appellate tribunal in cases involving demand of penalty without involving the demand of tax. So it is not only linked to 129 case. Let me tell you, at present, we do not have to pay any pre-deposit for any order which is asking you to pay the penalty only other than 129 case. So आज अगर आपको penalty का order आता है section 122 का, and if you want to make an appeal, if you want to file the appeal, you do not have to pay any pre-deposit as such at the stage of first appeal, at the stage of second appeal. Okay. आप देखिएगा 129 सबसेक्शन 3 के लिए फर्स्ट अपील में आपको प्री डिपॉजिट करना है, बट 129 के लिए सेकंड स्टेज ऑफ अपीलेट फोरम पर आपको कुछ भी प्री डिपॉजिट पे नहीं करना. वेयरएस जो अब प्रपोज चेंज हो रहा है वो ये बोल रहा है कि अगर इन केस वेयर द ऑर्डर इज इशूड टू डिमांड द पेनल्टी ओनली without involving the demand of tax other than 129 case, there is no pre-deposit at first appeal, but there is a pre-deposit at the second appeal. So second appellate provision is a broader provision which says that you have to pay 10% of the demand of penalty without involving the demand of tax, whether it is 122 case or 129 case. I hope I am clear on it. There is a very important observation why they are doing so. I am not able to understand, but what I am able to read this particular note of press release, I am able to take that interpretation only. The time will tell that in what manner this particular provision is drafted. So if there is an order issued under section 122, there is no pre-deposit at first appeal, but there is a pre-deposit at the second forum. This is the problem. Yes, please, sir.
Yeah, Vivekji, actually the purpose of introduction of this particular proviso is that in the erstwhile central excise regime, there was this provision already there that in case only penalties to be appealed against, you have already paid the taxes. You are filing a penalty against interest and penalty, or maybe only penalty, you have to pay a pre-deposit. So that thing, when it moved on to the central GST, it was taken away. In GST, it was not introduced because VAT में ये provision नहीं था.
Yes.
So because of that, because of the reservations by many states, they have not included this. But now, as they see that a lot of matters are arising where only penalties being demanded because of circular trading and all. So that's why they've introduced this, so that people who are doing all this circular trading and all, उनका appeal में जाना easy हो रहा था.
But surprisingly, this pre-deposit is not there at first appeal, but at the second appeal in that. Okay. And
in the first appeal also it is there, no?
In first appeal, we do not have any provision, no, other than 129 case. This is the point. This is the point.
They have not. See, they have not used the word 107.
When we read these two bullet points, the initial wordings to amend the proviso, and the second bullet point is to insert a new proviso.
Right.
This is the point. So if they are amending it, and they are clearly saying for payment of pre-deposit at 10% instead of 25%. So what is this case? This is the case of 129.
129.
Yes. And therefore, this observation gets a support that this anomaly still exists, but this is what the law is, They do amend the particular, they do make a mistake, and then they do try to correct it,
Yeah.
sometimes wholeheartedly, sometimes half-heartedly. And now
Yes.
the observation is, is this the observation, okay? Is this qua matter or qua the entire order? Because they are saying in cases involving demand of penalty without involving the demand of tax. In cases involving only demand of penalty without involving the demand of tax. So if, say, consider a case where the order contains five matters, and one of which is asking for the penalty only, other remaining cases are for penalty plus tax, both. So should I go for qua order or qua matter, right? When I go to uh, the reading of the provision, I think it is qua order, because no appeal shall be filed. So appeal subsection, because section 107 subsection 1 also starts with if the perceived person is aggrieved of an order. So I think that provision is pertaining to the order, not just for the matter only. So this is also an apprehension. I think the time will tell us in what manner it is to be interpreted. So this is the second point, because we have the short amount of time, so I'll go further. Then we have interesting issue of restaurant services. And it is very important to read the entire para in the pieces. So firstly, I have mentioned the entire para of the proposed change, which is given in the press release, yet not the notification is issued. But when I break this para, I find four important things or four important changes. Let us read it together. It says to omit the definition of declared tariff and suitably, okay, I give you the context. See, we have 11/2017 central tax rate notification as amended time to time. And we have the HSN 9963 dedicated for providing the services of accommodation and restaurant services and outdoor catering also. So this entry has undergone the changes number of times. If I am not mistaken, 5 to 6 times at least, this entry has been amended. So they still could not understand that what are the difficulties arising out of those wordings being faced by the industry at large. And because it's a big industry and hitting to even a common man, they should be very prompt to understand the implications before they bring the change. At present, what is happening is if you provide the hotel accommodation services, there are two rates. If the value of supply of a unit of accommodation is more than 7,500 per unit per day, in that case it is 18%. Okay, and equal to 7,500, it is 12% weighted. Okay, there is a mistake in writing here, or equivalent in the very first row. Kindly consider this mistake. The point is, if you are providing the hotel accommodation services and the value of the supply of a unit per day is more than 7,500, it is 18% accommodation services. And if it is up to 7,500, it is 12%. There is no bifurcation of 1,000 rupees and more than 1,000 rupees like this nowadays. Now coming to the restaurant services, the restaurant services are being charged in the pretext of determination of declared tariff, it says if the declared tariff of a unit of accommodation is more than 7,500, the restaurant services shall be charged at the rate of 18%. And if it is not having the declared tariff of a unit of accommodation per day more than 7,500, it is not to be treated as specified premises, and thereby the tax shall be levied at 5%. And where the restaurant qua that restaurant service, you shall not be entitled to take the credit. So there is no change in the hotel accommodation services. There is no change in the rate of hotel accommodation services, but now they are proposing the change in the restaurant services, etc. Because there is a big disalignment here. At one hand, you are determining the applicable GST rate on the basis of value of supply, but on another hand, you are charging the GST rate on the basis of declared tariff. So an hotel itself has to have the two principles or two underlying quantification to understand that what should be the implication of. Furthermore, when you read the definition of declared tariff, it is a very pathetic definition, I should say. It says it means all charges it means charges for all amenities provided in a unit of accommodation, like furniture, AC, refrigerator, or any other amenities, but without excluding any discount offered on the published charges for such unit. So if you are declaring that this suite is having a charge of say 15,000, but it shall be levied at 7,000, but will give you the discount at of 8,000, and you will be charged 7,000 only. In that case, hotel accommodation related GST rate is going to be say 12% only. But in case of restaurant services being provided by that hotel, shall not be based on actual value of supply, rather it is based on the declared tariff. So
Vivek sir, I just interrupt. We will have to conclude in maybe one minute. So,
okay. Sure, sir. Sure, sir. Yeah. So restaurant services are being charged at the rate of 18%, even though the actual value of supply is not more than 7,500. So now they are actually omitting the definition of declared tariff. They are delinking the tariff notification by that way. So they will be omitting this declared tariff definition and omitting this particular phrase in the tariff notification itself. And now they will be linking it with the actual value of supply. So there are a number of things to be discussed. Because of the time limitation, I would close this session. In fact, this particular point also requires a good discussion, which I would request Arup sir to take it in the subsequent session as and when you find it. Thank you.
You will. So thank you very much, Vivek sir. So over to Venuji for his final comments and the vote of thanks.
Yes. Firstly, Vivek sir, very thank you. And as you mentioned that you are in Indore for another session, and you pulled out some time for the SMS. And as Arup has rightly said, SMS is something where we will have an opportunity to think, rethink, and small community and good intellectual interaction. Thank you so much for taking your time out, and I'm sure everyone had a wonderful GSTR 99C filing and New Year thing. We've just we have just resumed after the two holiday thing. Not many are back into this. Hope next Saturday we will have good interaction. The session would be uploaded to the YouTube as usual, same our link. Thank you everyone for joining. Thank you, Vivek Bhai. Thank you, Arubda.
Thank you. Thank you, sir.
Yeah. Thank you, everyone. Thank you.
Thank you, sir.